So today we're going to talk about how to not waste your demo day and actually close your round. So I want you guys to imagine this. You've just delivered the perfect pitch on demo day, but then all you hear is crickets. There's no meetings, you have no investor commitments and no checks. And you're out of runway and your whole world collapses. Now, instead, imagine this. You've just delivered the perfect pitch on demo day. You have investors lined up that are eager to meet, and they want to discuss actual terms, not just get to know you. And then you close your round. What's the difference between scenario 1 and 2? I'll give you a hint. It has absolutely nothing to do with your pitch. So today, what we're going to cover is why demo day is the most underused fundraising trigger for your raise, the fatal mistake that most founders make that prevent them from raising on demo day, and how to leverage demo day correctly to achieve scenario 2. I'm going to tell you a bit about myself. So this was me on my demo day 4 years ago. I was very overconfident, apparently. This is what I was doing. And for a good reason, because we had just finished the program. We had done all of our prep. Our pitch was great. We had investor meetings lined up. And our outcome was we onboarded a great lead investor. We had a third of our round committed. We had a pilot secured. And so our demo day was successful by any definition of success. And so it was all rainbows and unicorns, right? Well, not exactly. Because they tell you that the first third of your round is the hardest. But what they don't tell you is that the next 2/3 can actually be even harder. And so most of the feedback we got from the investors we met with after demo day was, let's keep in touch. Maybe we'll circle back next quarter or next year. We had no other investor leads, and we had to start our outreach again from scratch. And it took us another 3 months to get new commitments for our round. And so we were back on a good trajectory again, and then COVID hit. And our lead investor pulled out. One by one, every single other investor pulled out. Our entire round fell through. And actually, to this date, we never closed that round. Company's still running, we never closed that round. All of this could have been avoided if I had just closed the round on demo day. And so the fatal mistake I made was I thought fundraising was Techstars' responsibility, when in reality, their intros may or may not be enough for you to close. And so the difference between those scenarios depends on you. It's on you to bridge that delta between the intros they make and what you need to actually close your round. So don't be like me, learn from my mistakes. The good news is I've been helping Techstars founders like you for the last 3 years, so you're in the right place. And today we're going to cover the strategies to prepare for demo day in a way that you truly maximize your chances of closing your round. So let's talk about why demo day, why the focus on demo day. Most founders take 2 to 3 months after demo day to raise, and that's with investors that actually want to invest. This isn't, chasing investors down and, finding new ones. The reason is because if you have your first meeting on demo day, that's when the relationship starts. And it can take 2 to 3 months of relationship building after that to actually close the round. With this method I'm going to show you, you can raise in 2 to 3 weeks, but you have to move those initial meetings earlier, have them during the program. That lets you accelerate the relationship building process in advance so that you can actually get commitments and close your round on demo day. So you can take the 2 to 3 months after demo day and translate that into 2 to 3 weeks before demo day. The reason this works is because demo day is a really powerful fundraising trigger. What it does is it marks the transition that your company is done with the strategizing and internal focus, and now it's ready to launch and grow. And it's an ideal time for an investor to put capital in. It functions as a natural deadline. So normally there's no incentive for an investor to write a check early, because the longer they wait, the more new information they'll have. So they'll almost never pull the trigger unless there's a deadline, and demo day is a great deadline. It creates FOMO. So when an investor feels like they're going to miss out on a good deal, all of a sudden, all of their due diligence, their committee meetings, their talks with their partners and their processes, and all the red tape just goes out the window. So if you have enough investor interest, you can actually play parties off of each other and push them all into making a decision. And I'm sure you guys all had the training with David Cohen where he talks about this. So let's dive into the how. How do you actually leverage Demo Day? There's two things. There's only two things you need to do. One is, and this is to close your round, add 50 investors to your pipeline and nurture that pipeline. That's it. If you actually do these two steps during your time in the program, you'll raise. There's no way to not raise. Let's break each of these down. So adding 50 investors, where are you going to find them? There's 3 avenues that I recommend, and these are prioritized based on least amount of time, highest chance of closing checks. First one is intros from your program. So ask your managing director for referrals. This is something that almost every founder I speak with, it's on their radar, but they don't actually do it. They're always waiting for the deck to be a better version, or they're waiting to hit some milestone, and the entire program will go by and they'll actually never get any investor intros from their MD. So ask your MD. Ask your investment manager for intros. Most programs have a dedicated investment manager. If you don't, there's a global one through Techstars that I'm sure you've been in touch with. Ask them. Say, you know, this is my company. This is what we're looking for. You should be able to get 5 from your MD and at least 10 from the investment manager. MD would be direct referrals, people they know who they know would be a good fit. Investment manager would be more general intros. You know, we've looked through our database and these are the investors in, you know, the Techstars network that we think would be a good fit. So for each, you send a forwardable and you describe the ideal investor profile that you're looking for, and you let them vet who they know to find you a good match. So you don't suggest to them. You're tapping an existing network. You're telling them, this is what I'm doing. This is who I'm looking for. You find me those people. The third way, ask the match meetings that you have lined up. Most programs will set you up with investors. It'll be either double opt-in, or you'll have actual office hours on demo day or the week after demo day. Most programs will match you with investors. Find out who you're matched with ahead of time. Don't wait until that day to meet with them. You need to reach out to them earlier. So you should at least be able to find 5 that way, and email them in advance. Don't wait till the day of. And we'll talk about what to email them with in a bit. Okay. Demo day attendees. Ask your managing director for a list of all the attendees that are going to be coming to demo day. These are people that are already going to be coming. They're already going to see your pitch on the day. And so if you have an opportunity to plant a seed with them ahead of time, now all of a sudden you have an excuse to go up to them and talk to them, or an excuse for them to come up to your booth and talk to you. It's really important that they know who you are before they show up to demo day so that you're on their radar. If you can't get the list of attendees, they don't share it or it hasn't been finalized, ask for a list of invitees. So this is the people that Techstars has invited to attend your demo day. If you can't get that list, then ask for a list of last year's attendees, because chances are there's a high overlap between attendees from last year and attendees in this year. And what you're going to do is you're going to go through every single person on that list. You're going to check out their LinkedIn or their website, and you're going to shortlist any relevant investors that you find. So you should at least be able to find 10 that way. There's no reason you shouldn't be able to at least get 10. All right, the third way, Techstars alumni. This is the most underutilized avenue to get checks, and it has a very, very high close rate. Go on Universe. You guys all have access. I'm sure you've done a session on how to use it. And search for every company that's seed stage or later that went through your program in your city in the last 2 years. And email the founder. So what you want to do, the reason you find any company there is because they've gone through the same program as you. They understand the ecosystem, and they know what the network there is like. And the reason you want to do seed stage or later, you want someone who's raised, who's closed the round that you've currently closed, and last 2 years, people who have active investors on their cap table who are in the same geographic area or plugged into the same network. So what you want to do is email the founder. You want to email them and say, I am, founder X, I'm going through, this program. Let's say you're in Chicago. I'm going through Chicago. I saw you went through Chicago in this year. I have my demo day coming up. This is my company. Do you know any investors that I should reach out to? And usually they'll know someone because they went through the same program. They actually want to help you out. So this is a very easy way to get 5. You're not going to have a huge, if it's just the last 2 years and you're looking for companies who have closed the round that you're currently closing, there's not going to be a huge number, but you will be able to find some. Next, go on Universe and search for every company that's Series A or later in your space. And the way I define your space is whatever industry you're in, your business model, anything that's comparable or adjacent to what you're working on. And the reason is because what you're going to do is you're going to look at their investor list. You're going to look at the investors that wrote checks into other Techstars companies that are in a similar space to you. The idea behind this is that if they wrote a check into a competitor or someone in a similar or adjacent space, they probably have some sort of thesis that might overlap with what you're working on. And so what do you guys think? Let's open it up to you guys. What do you guys think you should do? Do you think you should email the founder in this case or email the investor? You can throw it in the chat. Email the founder. Okay. Alex, you're a smart guy. What you want to do, email the founder. And the reason is because the founder has a relationship with that investor. You don't have to start from scratch. It's no longer cold. This is actually a warm, and Joel says ask for an intro. This is a warm channel that you can tap. And what you're going to do is you're going to do the same thing. I'm Alex. I'm currently in Techstars. I have my demo day coming up. I saw that investor X wrote a check into your pre-seed round. I've checked out their website, and I think they might be a really good fit for us. If you think it would make sense, do you mind making an intro for us? What's going to happen, and the way to find their email, you can, if it's not on Universe, check their LinkedIn. If it's not there, send it to founders at their domain. What's going to happen is 95% of the time, you're going to get a response back from the founder. And he's either going to say, yes, you know what? I think I've worked with this investor. I think they're great for what you're working on. I'm happy to make the intro. Or they're going to say, I worked with this investor. They're not a good fit because it sucks working with them. They're overbearing, or they're not deploying capital because they don't have an active fund right now, or I don't think it's a good fit for their thesis. However, I do have investor Y in mind who might be a good fit for you. So these emails almost have like a 90-95% chance of becoming a warm intro. Again, other founders who have gone through the program want to help you, especially if they're later stage and they've succeeded at the task that you're trying to tackle. So you should easily be able to find 15 investor intros through this way. All right. Who's keeping track? How many is that total? I think I gave the answer away. Okay, you've just added 50 investors to your pipeline. You got 20 from intros through your program, your MD and investment manager. You got 10 from the demo day attendee list, and you got 20 from the alumni network. That's all you need. That's all you need to add to your pipeline. So now what we're going to talk about is, what do you do with those 50? You need to nurture them. There is no point adding people to a spreadsheet. I've spoken with so many founders in this the most recent batch, where they have 100, 200, 300 list of investors, and they're really proud of it because they put a lot of time and effort into building that list, and those investors don't know they exist. They haven't reached out to them. So we got to nurture this pipeline. They're not going to sit in some Airtable document. We're going to build trust with them before demo day. We're going to make them excited to actually meet with you, because investors can only make a decision when they know you, when they know who you are. And the first meeting you ever have with an investor is always an introductory meeting. It's whatever the venue is, wherever you meet them, however you're introduced, the first meeting is an introductory meeting. It's to get to know the person. Waiting to meet them using that first meeting up on demo day can cost you the commitment that they could have made on that day if you had that first meeting earlier. So this is the only relationship timeline that works when it comes to demo day. What you want to do is have the intro call first. You need an intro call with an investor. That marks the start of the relationship. Then you want to send them update emails. So minimum 2. Between now and demo day, you need a minimum of 2 emails. Then you have demo day, then you close in the next meeting that's after that. We'll go into what each of these steps entail. But the reason that this is so important to have the intro call first is because the relationship doesn't begin. If you plant that seed earlier and you have that initial call and you've like sussed each other out and you've kind of gauged how that person is, it's all about the personal relationship. Then the update emails that you send afterwards, those actually build the relationship. If you haven't had this intro call and you send update emails, they have no idea who you are. They have no idea how to contextualize the information that you're sending. It doesn't build the relationship. In fact, it can just come across as spammy and annoying. So you got to get on the intro call before you send the update emails. This is the start of the relationship. All right. So we're going to get them on an intro call, all of the people that are in your pipeline, and then you're going to send them the weekly update emails. In the weekly update emails, you're going to only say 2 things, only 2 things. We're making rapid progress towards milestone X, whatever your big flashy milestone is that you're going to announce on demo day. You're just going to tell them you're making rapid progress towards that. There's only, and the second thing is that your round opens on demo day. The reason these are the only 2 like things you want to communicate is demo day instills a sense of urgency that you're working towards a goal. And that goal should be a shared goal between you and an investor, where this is the time to transition from the internal focus during Techstars to the external focus of actually launching. And what you want to highlight that you're making rapid progress towards the milestone. They want to know that you're on this upward trajectory. They want to know that you're actually doing stuff, that you're not sitting around waiting for a check. The worst message you can get across to an investor is, we have these big plans and we just need to raise before we can actually execute on that. Nobody wants to see that. Nobody wants you to play around with their money. They want to know that you're actually making progress without them so that they actually want to join and be part of that story. They don't want to just be an enabler to allow you to try things out. They want to be part of the momentum you've already built. So you send those out. You should be sending them out weekly anyways. You got to send at least 2 between now and demo day if someone is new. Intro call, 2 update emails. Let's do the math on this. So 50 leads, the 50 that we've added to your spreadsheet, if you close 10%, and 10% is not bad. I've seen 20, I've seen 30% close rate because these are all warm intros from within the network. That results in 5 checks. Average check size, 100K. If you get 5 checks, that's 500K. If you're raising more, if you're raising $1 million, the average check, you're probably focusing more on VCs. Average check size might be higher. If you're raising less than 500, if you're raising 250, if you're raising 300, average check size will be lower because you're targeting more angels. But still, the number 5, I've seen it to be the golden rule. If you can get 50 leads, that can result in at least 5 checks. That should fill your round. So that's it. Can we, any questions that anyone has before we move on that? On the math, on the pipeline, on where to find the leads? All right, thank you, Alex. All right, let's continue then. So demo day sells itself. It's really the ultimate fundraising hack if you use it right. All you need to do is market it correctly. You've put in a lot of work going through the program. It would be a shame to not market the work that you've done effectively to the right audience. And it's not that hard to close your round if you follow these steps. you got to start early. You got to start, ideally you started a month ago. Most people have 2 weeks or 10 days before their demo day. If you start this right now, it is enough time. And what I can guarantee is very few other founders are doing this. They've wrapped up the program, they're focusing just on their pitch part of their demo day, and they probably think that they don't have the time or mind space for this. So it's not actually that hard to differentiate yourself from your competition, which is the other founders in your cohort that are presenting on demo day. But you got to start on this early. So you can easily get more checks with these strategies, especially when everyone else is busy perfecting their presentation and not focusing on their pipeline and just thinking that somehow they give this magical pitch on demo day, investors are gonna line up and give them checks.